Good day, everyone. In a few minutes, we are going to learn what IFVG means. Most of us understand the word FVG, but today we are going to learn IFVG. Alright, so what is IFVG? Let's start with the definition of FVG. IFVG stands for inverse fair value gap. A normal FVG is an imbalance where price moves fast and leave a gap. We all understand that example. Moves fast and leave a gap. In the FVG, you could see a very strong gap happening in the market. Alright, you could see a very strong gap happening in the market. That's an FVG, right? And we have different examples of that, which you will see in most of my videos, of my lessons online. Right now, an FVG is what happens after that FVG fails. FVG normally fails most times, not all the time, but in most scenarios it fails. So you have to simply put, when a fair value gap is violated, it flips and becomes a trap zone. Okay, so it becomes a trap zone. That flip is what we call IFVG. All right, so you are going to understand it. Hang on. How FVG is formed: 1. Price creates a fair value gap. 2. Traders expect price to respect that fair value gap. 3. Price break through the fair value gap instead of respecting it. Okay, so a fair value gap is created. Let's use a bullish structure, for example. We have a fair value gap created, right? That is, creates a fair value gap. Traders expect the price to respect this FVG. The price breaks through the FVG instead of respecting it. Okay, instead of just respecting and reacting, it's price is supposed to respect and react, but it will break through it. Okay, so now that broken FVG becomes an inverse FVG. So where price comes back into that zone, which can be considered a reversal, or a continuation do what happens, right? So that's it. So the market will come back into the FVG, then boom to the upside. Now I'm going to show you an example on the chart. This structure right here, you can see, is a big C structure. All right. So now what you can clearly see here is a drop and a fair value gap happening to the downside. Now, instead of the market just respecting the FVG, it broke through. All right. So now we now have two FVGs together. You can see a fair value gap here, a fair value gap here. All right. So now we now have a clear FVG. This was the previous. This is the recent. All right. So this is a signal for buyers to hop into this market. All right. So what we will be expecting is that the market will come into this FVG again to react on it. But this time around, instead of reversing or violating this setup, it will now hold. What is going to happen here is what traders trying to sell expected this market to do. Right, so they expect the market to react in the IVG then drop, but it did not. So any seller trying to drop in from this market will automatically get violated. So this is why you need to understand the market structure first before you're able to use these simple things. These are just strategies and tools we use in analyzing the market. You don't look for these things if you don't understand the market structure. You will clearly see that liquidity sweep is clearly visible here. Right, so and we have our other block which can serve as a head and shoulder pattern, right? Other block, okay. So everything just aligns, all right. So what I'll be expecting is that the market will into this the 50% of this FVG. Somewhere around there, I'm going to plot the 50%. I'm going to plot my entry position, put my stop loss below this low, and I'll buy. I can decide to check the higher time frame, like the 4 hours, to clearly see what is happening in this structure. So I'm going to take this off of the chart, okay. So that's it literally. Right, so that's it literally. You can clearly see that it all makes sense at the end of the day. You don't just carelessly use these things if you don't understand what the higher time frame is doing. All right, we can clearly see that the higher time frame has done its sweep and it is currently reacting from a strong demand level. All right, when you go down to the daily structure, you will see that that level is a whole order block. You can see it, a very strong order block. You can see how everything now makes sense. A very strong order block, which you can refine down to make it even more better. Then okay, so that's it. Straight to the point. Everything can be implemented. You don't just blindly trade IFVG or FVG if you don't understand the whole structure of what is happening. All right, so you can see how everything now aligns. So clearly, traders could literally call this a change of character, right? And now a reversal happening. But the IFVG is more like a confirmation of reason why we should be expected to take a buy from this position. But that is not 100. That doesn't mean that you should go all in. Anything could happen. It could fail. But you must protect your capital at the end of the day. So trade safely, trade smartly, and stay profitable. Follow me for more lessons like this, amazing lessons. Okay.